Does NIO stock have the chance to 100x? Now, before you answer, please watch, listen, and at the end of the video, after you've digested everything I've shared, I'd like to hear from you or see your comments and opinions expressed at that point, because we're not only going to talk about NIO with its fails to deliver history, we're also going to talk about Apple, NVIDIA, Amazon, Netflix, and Tesla. First off, let's go here. This is a video I did a while back. I called it NIO Penny Stock Fears. And in that video, I shared this article. Now, interestingly enough, the companies that I mentioned, Amazon, Apple, NVIDIA, Netflix, and Tesla, all have been 100x or better returns over the course of their time. And yet every one of them also traded at penny stock levels at some point earlier on in their history. Now, I think there is a correlation. I think there could be a link here. I think that being an IDE matters. And IDE is an innovative driven enterprise. I talked about it a couple times in videos. This is the more recent one that I did. And in this video, you'll note I've got Apple, NVIDIA, Amazon, Netflix, NIO, Tesla as IDEs. And I reference future video. This is that video. But this is what an IDE is, and kind of the tale of two entrepreneurs. This is a study that was done from folks at MIT. And basically, if you categorize businesses in kind of two different lanes, you've got the left lane. This side, you've got the SME, a small, medium enterprise. And that growth trajectory is fairly consistent over time. But an IDE, an innovative driven enterprise, and it reads right up here, greater investment at the start before revenue turns positive, but that results in initially negative earnings for a period, but with the prospect of impact later and exponential growth further up the curve. Now, I would argue that almost, if not every one of these other companies, Apple, NVIDIA, Amazon, Netflix, and perhaps Tesla are all IDEs. But let's now dig into my thought and kind of where we may be able to connect some dots here. This is Apple, and I'm going to share the fails to deliver. Fails to deliver, for those who don't know, are when there could have been naked shorting, there could have been illegal suppression of price action going on. And I believe that IDE companies in particular are easier targets for shorts in the stock market, especially before they've turned massive, consistent profits, because as long as there's a short thesis that can be made and sort of a negative view of the company, then the shorts can perhaps potentially get away with even nefarious predatory shorting of the stock. Now, the stock prices are going to be represented by the yellow line. The white lines represent fails to deliver. This is just the recent history of Apple. I want you to see with me as we go back in time what I'm looking for as we go back. And we're not going to get the full history on all these companies because some of them have been listed, or the fails to deliver, they haven't been tracked that far back. But concept overview is the key for me. And what I'm looking for is a spiking of fails to deliver, the white lines, relative or in conjunction with kind of a clear upward trajectory of the stock price represented in yellow. And I'm looking for this on all of them. So as we go further out, for example, what I notice is a lot fewer fails to deliver here than at an earlier stage. And I'm just curious if we won't see more of that. This is Apple. And I'm just going to take it back as far as we've got history on the FTDs, the fails to deliver. Wow. Imagine that. So many more fails to deliver are popping up now on the left side of the screen, and the stock price is much lower relative to where it is now. Wow, look at that. Look at this barrage of fails to deliver early on. This would have been from 2004 to about 2009. And look at that heavy, intense fails to deliver represented by those white lines. And then later, as those drop off, you see the stock price go. And eventually, when it really rockets and takes off, look at this, very, very little on the fails to deliver in the recent history relative to the older history of the stock. The next one up is NVIDIA. So let's see how this one looks. Now, again, I'm starting with the recent history, but we're going to zoom out and slowly go back over time. Wow, that changed fast, didn't it? Just the resizing of the chart. This one's interesting because it doesn't appear that there are as many, although there have been a couple times where there were a lot. And then I don't know if maybe there's a correlation here. I don't know. Look, this is all speculative. You're looking at this real time with me as I'm kind of observing it. Here we go. There's the early on. And this would have been, again, 2004, 2008, almost 2009. Perhaps these were in a basket being shorted together. I think that's possible. I would say that would make sense. But again, what you'll notice is, other than this one massive line, I wonder if that didn't help or contribute to some of the price action here. Maybe it did, maybe it didn't. Look, the point in doing this is a fun exercise that I wanted to do, because I do think there could be a correlation with these companies, these IDEs, at an earlier stage before they're recognized as monsters, juggernauts, where they are more subject to the heavier shorting. And that could be represented in part by fails to deliver, maybe as naked shorts, maybe not. Next up is Amazon. Let's see how she looks as we go back in time. This is kind of fun for me, because I'm basically just sharing with you what I would normally be doing on my own. And that's part of what I enjoy, is kind of nerding out on the channel, as I like to call it, sharing some of the research and observations. And if there are patterns, I do want to share them. Wow, look at this. Again, we've got heavy shorting. And once again, 2004 into, this is 2009, much more condensed fails to deliver versus the certainly the near term. Interesting though, isn't it? When we kind of dig in and look a little deeper and go back in history. Next up is Netflix. Netflix, let's see how this one's going to look. So interesting. Some of these get, just a one day, one really big bar of the fails to deliver. That's when it's reported, by the way. Fails to deliver are always delayed. This is always lagged data. We never get access to real-time data. So in essence, we're always trailing with whatever we see versus what's actually taking place in the market. Again, this is why my view has always kind of been, I prefer the long term. I personally prefer to do research and then trust my research over the course of time. And then short term is just the stock price action. Wow, look at that. That is a barrage. That is crazy. From 2004 to almost 2009. Very interesting. I would venture at this point, I don't think it's unfair or unrealistic to suggest that perhaps these were being shorted in a basket, maybe somewhere in multiple baskets. And wow, I want to hear from other people though. Finally, last but not least, we're going to talk Tesla. And Tesla is interesting. There are a couple points that I'd like to make about Tesla. I think there is still a short thesis in play for those contrarians who really want to see the demise of this company. And I think their argument, if they want to make an argument, then it has to be on things like Tesla wouldn't have got to profitability without assistance from both the Chinese and the US governments. They needed government subsidies. In other words, it wasn't the strength of the business model underlying that got the company to profitability. And therefore, perhaps it is at risk if it can't maintain enough global market share going forward. I think that's the only kind of thesis. You can toss in a couple things like if, and I don't know what the revenues are that they've collected from FSD subscribers, people who have paid to, as I've said it before, essentially paid for Tesla to try and do R&D with the people actually paying for it, funding it. If that changes, I don't know how much that shifts things, but I do know that Tesla being listed in the S&P 500 when it was at about the same time that it started showing profits, I think that correlation is part of what torched shorts. I think there was a short squeeze in Tesla. I think it was massive. And so I don't know if we'll see a stock do exactly, what we saw with Tesla again. It's an interesting study. That's also why I wanted to kind of separate it from the others. And, look at this. You see the stock price when it really took off. It started just rocketing. And you also see the absence of fails to deliver here in this time frame after that profitability was kind of established. Again, this is part of my reason and thinking for why profitability for a company, an IDE especially like NIO, is important to crush the short thesis. I think that once it's proven out and very clear to everyone that this company is not going bankrupt, they are a profitable company, then it makes it more difficult and a lot more risky for shorts to try and maintain a position. Now, this is the full history of Tesla being listed in the market. We're going back to 2010, but look at that. Such a heavy dosing of the fails to deliver all the way up until, probably shorts got torched, I would say. And we saw the stock price absolutely rocket and take off. So that's one that I think is really interesting moving forward. What happens if, for example, Tesla ends up losing market share globally? What does the business model underlying look like at that point? So finally, let's look at and talk about NIO stock. Now, this is the recent history for NIO. I've talked about this in recent videos, but in case you're new or haven't heard me talk about it, I'm going to mention it or talk about it again. This level of FTDs, this spiking level over 5 million, over 6 million on a single day. Same week, there were about 3.5 million. This is noteworthy for me because we hadn't seen that level come through for NIO stock, which is a younger company, a younger stock. It's only been listed in the US market since 2018. But look at this. Again, we've got this heavy FTD reporting coming in. And the last time we saw 5 and 6 million shares that couldn't be located on single days was back in 2020 until we saw it here. It was late 2019 and early 2020. And interestingly enough, for the company NIO is not yet profitable, which is why I think shorts can still kind of maintain a short thesis. Also, it's a Chinese-based company and stock, which I think at this time in particular is easier to short, in part because of the thesis and the narrative that goes on. So my question is this: what I didn't see with those other stocks and companies is I didn't see this kind of a move at such an early stage, because again, NIO is not yet profitable. So my thinking is kind of, all right, how does this unfold? If this is a mechanism that we see play out in the future for NIO stock, well, if that ends up being in play, NIO stock went to almost $70. And in fact, this is what's really interesting. In 6 months, NIO stock went from $3.50 to $55. And that was in this time frame right in here. And as you see, the fails to deliver dropped off. Now, with the fails to deliver picking back up and being in play and now spiking in recent months, it has still taken about 3 years to bring the stock price for NIO from $45 down to, they got it down to sub $4, and now it's back around the $5 level, a little above $5 as I'm doing this video. Date and timestamp on this is the weekend of September. It's actually the 22nd. It's Sunday, middle of the afternoon as I'm recording this. I'll try to get this up and out this evening so that it can come out before the market opens, even in Asia tonight. But this was just a fascinating kind of study that I wanted to do for the viewers who are attentive to this thing. And so now with that in mind, I guess my question is this: what's your view of this company long-term? Do you think it has the potential to 100x? And considering it's already, been to almost $70 with the stock price, the company is still really at an early stage, I believe, and yet they're positioned better, I believe, than any other company in the Chinese market, which is pivoting into all NEVs, that's new energy vehicles in the future. And NIO is not just looking at the EV play. They've almost adopted elements of Apple, Amazon, NVDA, Tesla. I feel like they have taken sort of the best attributes or advantages that some of those companies have and used those concepts and created a hybrid business model. And I think NIO is going to be perhaps more like a holding company in the future with lots of profitable businesses within. But again, that's kind of my take. This has always been long-term for me. And I just wanted to share this, do this video breakdown, talk about some of these things. I do think that for a short, with the short thesis, looking to make money, shorting a stock in the short term, it makes sense to target IDEs because they do need longer, as we saw from the chart. If this is the growth trajectory for these companies, and you can basically short all the way until whatever point in here the company proves profitability and then it can maintain, and then it has that explosive growth. And I think, ironically, that the shorter term, earlier shorting that goes on, including perhaps the fails to deliver, contribute to the run-up in stock price because they've been perhaps nefariously, predatorily shorting and holding, suppressing price And maybe we don't even get to see true price action. I don't know. These are just some of the things that I think about. I want to hear from others, though. I probably talked more than I needed to, but I wanted to go a little more in depth, cover some of these. And interestingly enough, kind of on the note of the Chinese stock being more subject to shorting at this time, Alibaba is an incredibly profitable company. And I'm waiting to get more fails to deliver data because they've been doing stock buybacks, and they've also been now listed in the Southbound Connect. So more Chinese investors are able to buy. I want to do some comparison once we get the data of what the buying has looked like with the buybacks and the investors in China buying relative to the fails to deliver data, because it's been elevated for a while for Alibaba. And I just think if there's an obvious correlation, I think we'll be able to kind of see it, or at least see something that looks like a pretty strong indicator. So I'll do that in a separate video. I'm still waiting on some of that data. But again, that I think plays in. I think it's possible that NIO could be getting shorted in at least 3 different baskets: as a meme stock, as an EV stock, and as a Chinese stock. I'd like to hear from you. Thanks for sticking around to the end. Have a great day. I'll see you all again very soon.